I'm Charlotte McLeod with investingnews.com, and here today with me is Peter Grandich of Peter Grandich and Company. Really good to have you here once again and in your Canucks jersey. I love it.
Yeah, I had hoped to be in Vancouver for a show, and unfortunately, I can't travel. And I picked on so many people in Vancouver for decades that I felt the least I could do was wear it for a day around a conference. So the least I could do is wear it when I'm speaking to you as well.
Well, I certainly appreciate it, and so good to have you on right now. So much going on with gold and in the markets in general. So, of course, there's so many factors at play right now for gold. What would you pick out as the main drivers that you're watching right now?
Well, the main driver has been the just an onslaught of buying by the central banks, coupled with repatriation by countries has been the key factor. And behind that is, and we'll probably talk about it a little later, is what was happening with the BRICS and all. Because we still see net selling out of the exchange traded gold funds. It's a phenomena that, I sit here bewildered sometimes. Not only that, but because the mining shares have not partaken in such a high price yet. But it's an amazing that the financial service community, at least in the U.S., is continuing to be net sellers of the investment that's outperformed their two favorite investments, stocks and bonds, since the new millennium began. And yet, here we are.
Yeah, I think that is quite amazing to me as well. And I wonder, we'll get into this a little bit more as well, but just off the bat here, what do you think could spark a turnaround in that interest in Western investors?
Well, I personally, Charlotte, have never expected the general financial service community, and I can only speak for the U.S. I don't have any dealings in Canada anymore for quite a while. It's kryptonite to the typical financial advisor down here. Their livelihood is built on stocks and bonds. And normally, if gold's going to go up a lot, it's usually happening for reasons that may not be as bullish for stocks and bonds. If you think about it, since 2021, it's actually outperformed them since the millennium. But here we are 4 years now since I got out of the equity market to own gold, and it's outperformed both of them, including bonds. And that's unheard of, because when I was a young financial advisor many decades ago, the sales manager would always tell you, listen, if you're worried about the stock market, put them in bonds because they never lose money. Well, bonds lost money the last few years and all. So I don't fully expect the general financial community to ever return to it. What I do expect is that the gold mining companies now are basically going to print cash. Their free cash flow is just going to be records after records. Fourth quarter will be due out soon, but now with gold at 28, 2,900, the next couple of quarters, and they'll be one of the few sectors that will probably see dramatic growth in earnings, because the regular stock market is priced to perfection. Even the biggest bulls are not expecting a great increase in earnings. So that will help maybe get some interest from the financial service community, but they're never going to go back and own gold in a big way. They're just not.
Yeah, well, I think that's important maybe for us all to realize at this point. And I'm going to come back to the gold stocks a little bit later. Before we go there, maybe we take another look at what's going on in the overall picture for gold. So talking about what's going on with the price right now and drivers, I know there's so much turmoil around this tariff situation. So at this point, it's changing day to day, but we have Canada and Mexico. The tariffs have been deferred. For China, that's not been the case. And when we look at the BRICS, it seems like Trump is still talking about 100% tariffs on the BRICS. So I wanted to make sure to bring that up to you, since you follow the BRICS nations very closely. Do you see those tariffs being put in place? And if they are, is that going to deter them from their de-dollarization efforts?
Well, I think in recent days, first, it's important to talk about what has been driving it. A couple of years ago, when I became so bullish on gold that I decided to own it versus even stocks or bonds, one of the beliefs was, and I stated back then to you and others, that the shifting of trading of gold from London, New York to Asia is going to kill the paper market, which has basically been manipulated at times, and suppress the gold market, purposely or unpurposely. I'm not here to be conspiracy or whatever. And with that, you would eventually see the physical outweigh the paper market, and then gold could really take off. That was the thesis. And that's basically what's happened in recent days and weeks. for whatever reason, fears of tariffs, actual tariffs, whatever the case may be, the physical market has had such a strong run in recent days that has caused the paper market to really have huge issues. And also people that have to make physical deliveries and all. And that's been innate. But the longer picture, which you touched on, is the real bullish one. So the BRIC nations, which a couple of years ago when I got behind it and aided in me wanting to own gold, and I don't root for it as an American because if I'm right about it, it's not going to help America. It's going to hurt America. But they basically decided that de-dollarization is here. It's only going to get weaker and worse to own over time. And not that they needed to create a new currency, because that was always talk that came out of bullion deals. That was never something that the actual leading countries spoke about. But they needed to look for ways to trade without the dollar and around the US. And that really was the idea of the BRICS formation. Well, if you talk to a country now and say, well, let me just tell you this. The United States, first they abandoned their allies, including Canada, when they left Afghanistan. Then in the Ukraine war, they froze the assets. They were the lead reason to freeze the assets of the Russians. And then they took the interest, which was entitled to be theirs, and give it to their enemy. And now the new guy on the block, meaning Trump, he's basically said, if you don't play with us, he's going to beat you down to the pulp. They're not going to try to get into a wall of words with him, but that's a marketing piece for those that want BRICS. And I think it's going to backfire on him speaking that way. Now, he does a lot of these things to position himself, the art of the negotiator and all. But that's a very, very bullish factor. And they recognize that whatever they do eventually in size, they're not going to be able to do it with just a fiat currency. They're going to need something of a real asset, just either between themselves or it ever grows someday to be something that others could be involved in that aren't part of the pack. And that's the reason for the accumulation of gold. Listen, the central banks have not bought all this gold and repatriated it for a trade, because who do they trade it to? They're not going to be able to flip it and make that money. So they have bought it on the belief that somewheres down the road, gold is going to play a more important role on how we live. Now, I may be past by the time that comes, but it's coming.
Okay. I think that gives us a good look at what's going on with the BRICS in this situation as it plays out. I want to take a look at Trump a little bit more broadly, just because there's so many headlines going on right now. I was just attending the Vancouver Resource Investment Conference a couple of weeks ago, and that was happening really just in the middle of the inauguration time. So it was hard to get opinions on what Trump was going to mean for gold, the mining sector. There's a lot of talk about people feeling optimistic about work on efficiency, cutting spending. But I'm curious to get your thoughts now that we're a couple of weeks in at least. What can he actually accomplish out of all these many promises made?
Well, in terms of the metals, he's a net positive. He's definitely recognizes the absolute shortage here in the U.S. of critical metals and the recognition of what they have to do about it and who basically controls that. Second, I know people in Alaska who during the last several years were not optimistic and faced a lot of challenges from the federal government. Many now feel that that's impediment is out of the way, or certainly going to be less volatile on it. So in terms of that, and also exploring here in the U.S., that he's going to be much more supportive to where Biden or whoever was controlling Biden, was turning down these critical minerals in Minnesota and all these other places. He's definitely a net positive for exploration and all. Where the difficulty comes, and I'm not saying this because you're Canadian, Canada was my home away from home for several decades. I think we owe them a little bit more slack, if you want to call it, on this tariffs and trade war, because they've been just a phenomenal ally, and we're the two biggest trading partners. But this is the way that this man operates. I'd be offended if your premiers were sitting up there and say, the United States should become part of Canada. We should just make it one of our provinces. I would say, who are you to say that? Well, that's how Canadians must feel when he talks about this 51st state and all. And I think it's a negotiation point. And quite frankly, I think with a change in government to a more conservative government and all, I think he's going to be more open to dealing with Canada than the current person that's sitting there.
Yeah, we are really in flux in Canada right now as we approach that leadership change, which I'm sure is coming later this year. Okay, so that gives us kind of an idea of what's going on with Trump and gold and resource sector. I want to go back to the gold price because I remember we talked this past summer, and you had told me at the time, you are not generally a person who is out there talking about $5,000 gold and things like that. But you were kind of changing your mind, and that was no longer sounding foolish to you, which was pretty interesting to me. So, 2025, what are you thinking happens with the gold price?
Yeah, as we started to get to 23 and 2400, and my target was hit, which was 2536 when gold was 1300. I then said, this is not crazy anymore about 5,000, but let's get to 3,000 first. And that's just a round number. There isn't anything specific about it. But it was a number that I felt we were going to get to without ever going below 2,000 again. And then when we get there, kind of address where we could be. Well, we're not that far away from it as we speak. And at the rate we're going here, especially if these shortages continue, we could be there rather quick. The one thing I'll just say is, and I think you know this from me, is I've never owned it because I want to be able to buy a loaf of bread when nobody else can. I want to keep it right next to my ammo in my log cabin in the woods. I'm not in that camp, and that the whole world's going to fall apart and all. Because even if you have gold, the ones who don't but survive, they're going to try to take it from the people that have it. So I never get into that stuff. I treat it as a capital appreciation potential. It's still an important part of that. And I think one of the philosophy that I have overall to tie this into my overall view is it was pretty okay to be a capital appreciation person for the last 40 years. Markets basically went up other than some sharp, short-term, vicious, but not long-lasting bear markets. I think that's changing, and I think capital preservation now is going to overrule capital appreciation. And therefore, gold will still stay in my opinion, should be part of most people's portfolio. But maybe the percentages that I once had or thought people should have would lower if and when we touch the 3,000. But right now, there's no reason to get concerned. In fact, I personally, and again, I don't want to skip if you were going anywhere, but I actually took some of my physical bullion and sold it so I could buy more junior resource stocks, which is why my hair has receded since we last spoke. But the bottom line is, I don't think there's any major reason to be concerned yet about ownership of gold, as long as you're long, not short.
Okay, yeah, I think that gives a very good idea of where your head is at, and I'll ask you a little bit more about the juniors in just a moment. If we look at what's going on in the overall market, do you think it's been such advancements there, and now we're seeing this concentration in all the major tech stocks? Is this something that comes to an end this year? How are you feeling about the overall market situation?
So what I learned a long time ago, and you had to lose a lot of money to learn this, it's not how much you make, it's how much you don't lose, which is going to separate you from the winners from the losers. So the good thing I feel about, even though I've been overall bearish on the market, is I never went short it. And therefore, what I did put my money in actually did as well, if not better, which was the physical gold and all. I think there's two issues, and I think this is very important, Charles. A lot of people don't talk about this, so please indulge me a minute or two. The market that I entered in 1984 as a young stockbroker doesn't exist anymore. 90% of the trading was retail investors. Institutional was minimal, and there was no such thing as computer trading. It just wasn't. And people bought stocks for what the original reason where the stock exchange was there, where you could buy and sell part ownerships of businesses. Now, over half the money, almost 55%, they say, is in passive funds, which means these are funds that are not being actively managed, and they're basically being invested to track indexes or indices. And therefore, the manager, he or she, doesn't have the right to go and buy or sell individual stocks. Now, as long as the market's going up, more money pours into those because over half of the money of new money keeps going in, and they kind of come like a self-fulfilling prophecy. I'll give you an example. The biggest indice that they use is something with an S&P 500 index. There's like 470 of them. Well, of the 470, 410 have Apple stock in it. So basically, as new money keeps coming in versus going out, Apple gets bought. It's one of the things that kept that narrow group up because they make up such a significant port. But that will work in reverse if and when people start to believe it's no longer beneficial to be in passive funds that are betting on something long. It'll be the same way because a manager will not be able to go, wait a minute, I don't want to sell Apple here. It's a very good company. They won't have no choice. Now, the rest of the money, about 75% of that is in computer-driven related programs, algorithms. Some of them are just simply trades based on words and headline stories, and some are very sophisticated programs that include futures and options and all of that. The smallest part of the pie now in the stock market is people like me from 40 years ago that bought part ownerships of businesses. And therefore, I always tell people my age, I'm 68, but basically 55 and over, those of us with gray hair and no hair, it's not the market we grew up in. You can't invest in the same manner that you did. Those are very, very important parts. And then there's one other. And this will not get me invited to Christmas parties here at the financial service firms in the US, but it's a fact of life. Almost 50% now of financial advisors giving advice in the United States weren't born when I started in this business. Now, that doesn't make me any better than them, but there is a lack of real experience because for the most part, half of these folks have basically experienced a one-way street. They learned how to drive on it and they do very well. They put the gas to the pedal, and the odd time when something went bad, this thing called the Fed came along as a tow truck, fixed everything, and was back to driving one way. If and when, and I don't know when that'll be, Charlotte, but if and when the market ever goes to a two-way street, or worse yet, a traffic circle, I feel that the lack of experience that people have will be a hindrance and cause more downside that mother otherwise happen. So I just take this attitude now that for whatever's left of my life and career in this business is that I'm going to be a live chicken versus a dead duck.
Okay, I really like that driving metaphor that you use. That makes it very clear to me. And I think this takes us maybe back around to what's going on with the gold stocks. So for a long time, I've been talking with you and other experts about the disconnect between the gold price and the gold stocks. And when are these gold stocks going to finally start moving? So you're talking at the beginning of the conversation about how good the balance sheets of the larger miners are looking. Are we starting to see that gap close? And at what point do the juniors hopefully start to catch up?
So the juniors have two big negatives that still exist, and I'll get to them in a moment. But let's start with the good part of the checklist. First of all, the price is just crazy. I mean, the amount of money that majors are going to make with a selling going forward here at 2,800, maybe up to 3,000 out, several months. They're just going to be cash machines for several quarters. And that was important because at the end of the day, they will use their currency, their stock, as their buying power to get new reserves. They're not going to all start grassroots production. They're going to go look at companies, make acquisitions, do strategic deals and all, and that will help the junior market. But the two big things that still anchor the junior market down and have held it back, it's not an excuse, it's a fact of life. I've lost money in these things to understand them. One is crypto. Cryptocurrency has taken the person or persons that might have otherwise went into the junior market 20 or 30 years ago, and they're now in the crypto market. That's where their excitement, that's where their speculation, meme coins. I mean, what's a meme coin? It's like you and I come out tomorrow and say, hey, we started our coin. You want to buy it? And it's just who wants the greater fool theory. There's no value. There's no intricate value. I can't use it for anything else. But that's where the hard speculative money has gone. And I don't think it's coming to juniors anytime soon again. The only way it's going to come is that slows down and people start to see how well the majors are doing. And as they go down the food chain and start making acquisitions and suddenly 50-cent stocks are $2, that'll track it back. And the other thing is, I'm here to argue that I think the junior resource market is smaller today than it was 20 years ago. I don't think there's as many players as there were. There certainly aren't as many institutional players that once existed. And therefore, it's more of a challenge for junior resource companies to get financings and recognition and all of that kind of stuff. And that's still a challenge. But everything else has clicked now for them. And the one thing that's stopping it is the logjam. When the majors finally not only just merge with themselves, but really go into the junior market with action, that'll be when we'll see the market take off. And it won't matter. It could be a gold company, it could be a copper. Copper and gold is probably the best two you can have right now. And there are a lot of more companies like that now. Silver still lags. It's no offense, it's still like kissing your sister to a lot of people. But and then some of the off metals and all, even uranium. But that's really what still faces the junior resource market. It's still a challenge. It's not easy. I see some of the same folks that I remember 20, 30 years ago. I used to speak at conferences. They're still kind of saying the same things about it, but it's been very, very hard to make money in that unless you're the person in the private placement arena and that kind of stuff, or else it's been a challenge.
Okay, really good overview. And talking a little bit more about challenges for the juniors, I follow you on Twitter, or X, I guess we should call it now. And one of the points you've been posting about, I think recently, is about the challenge for juniors in terms of marketing themselves, getting their story out there. And of course, we don't want to see them be overly promotional, but you also don't want to see a company just doing nothing and not getting the story out there. So how do you want to see companies balance that? What should they be doing? Are there any good examples you see?
Well, their biggest challenge is they lost their biggest avenue to the end user, meaning the person that ends up buying the junior resource stock. And that was 20 years ago. There were thousands of Peter Graniches who had a book of business, part of it, all of it, and bought juniors. And therefore, if that Acme Resources got me interested, they got my 50 to 500 clients invested. They're dinosaurs. There still may be a handful of financial advisors doing that, but no one does it because you can't make money. Commissions are basically gone out of the equation and all. The second thing is regulatory. Down here in the US, some of the discount brokers now won't even allow you to buy a stock, even if it has an OTC symbol, but trades on a Canadian exchange and all. And then, of course, the regulatory to where they basically can't say anything about that project. And you go to probably the regulatory people, hey, all I got is sizzle. Well, we don't allow sizzle. Well, I don't have anything else. We're all hoping we find something. It's a lot harder to be a junior resource company than it was 10, 20, 30 years ago. And also the fact of where you can go. The world has shrunk. 30 years ago, you and I you would have been a baby, but we would have spun a globe and we could, a finger land in almost any country. Yeah, we can go exploring there. Not anymore. That's the other challenge. And financing. It's like I said, there's just not as many people doing these things. And that's the challenge for it. And people who invest in the juniors have to give them credit. First of all, it's a business where failure is the norm anyway. 1 out of 10 is going to find a project, develop it, and sell it or make it into a mine. The rest are just not going to do it. And so where a business's failure is the norm, that management team also has all these other issues now pressing them. And then the last part is the people that invest in them or speculate in them, because speculating is really what they're doing, because speculating is really gambling. They become much more short-sighted. They don't give the time that normally one used to give to these companies. It's almost like if not in a day or a week, if news hasn't broken and something's wrong. And part of that is because they basically don't have high commissions, so they can get out of these things for just, with a penny or 2 cent move. So it's far more difficult to be. I'm not defending them. I still have some of these guys do blog sponsorships for me, but it's much more difficult for the typical junior resource stock. Now, part of it that's changing, like your company and all, that builds a good following, has a lot of internet where most people gone, even us old gray hair, bald head folks have been brought into this computer world and, to websites and all. And that take time, but that's building. And, listen, if I may, there used to be big newsletter writers in the junior resource business, famous ones. I never considered myself famous one, but I wrote 4 of them. Well, if you think about what it used to be to put a newsletter, I'd have to think it out, type it up, give it to the printer to typeset it, print it, wait till it dry, fold it, stick it in an envelope, and 2 to 3 days later, get it out to your readers or clients. Now, in a few seconds, sitting at a keyboard, everything goes out. That's the upside to this business. And so everything's going to be driven now through the internet. No, the days of newsletter writers, and no offense to the shows, and still be, if companies aren't using social media for their promotional marketing, they're up against it.
All really interesting topics. And just a small follow up on the financing environment right now. I think a lot of the time when I ask about how is financing for juniors, how is it for them getting money, I hear that, well, the good companies will get money and that'll be okay. The ones that aren't good just won't. Do you think that's true? Is it just that the good companies will eventually get the money that they need?
Yeah, they will, but the bad companies never die, even though they should. There's probably several hundred companies that be better off that they'd all merge together. But a lot of these things become a lifestyle companies. These juniors, they get a project, they finance it enough. They're basically a one or two man or woman operation. If it doesn't work out, they change the name, they restructure it, and they do it again. And when things are tough and lean, they take what little, that capital was going into better deals and so forth. I think a lot of them have run out of that. We're not seeing a lot of reorganization deals done anymore. It used to see a property and then you see a different name and say, where did I see this property before? And then you realize it used to be in another company 5 or 7 years ago. That has slowly died. And I think that'll eventually be beneficial for the junior market.
Okay, okay. I think we've got a pretty good idea of your thoughts on the gold landscape right now, but I want to talk about copper as well. We've spoken about your outlook for copper as well, and I think earlier in this conversation you mentioned if you want to own stocks, a gold copper is something that probably looks pretty good. So copper is pretty interesting. I think a lot of people have a positive outlook, but then at different time horizons for when they think it will start doing well. So what is your outlook for copper in 2025?
So the reason that is, and I know some of those people who may not be as bullish as I am, is because there used to be ample supply of it. So when the economy slowed down, copper always went down and you wanted to be out of it. The problem is there isn't the ample supply anymore. There's not enough above ground supply that we can just say, don't find new mines and we can live off what we have for 3 or 5 years. That's not the case anymore. So that's where I think some of those less than bullish people may be missing it. Now, the electrification story has clearly calmed down. It's not the everybody and anything going to it. And that probably took some of the luster out of some of the bullishness for copper because that was part of the selling point. The problem remains is that the grades have shrunk dramatically around the world. It's going to need a much higher copper price than even now, well above 5, to go to some of the areas where you used to mine when it was only $2 or $3 of copper price. And second, and going back to what we talked about earlier, it's still much more difficult to go to a lot of places. And the fact of, this critical mineral and, tariffs and all, and who's going to control what and everything. So my opinion is this: it has demonstrated tremendous support on either side of 4. I don't suspect it'll be much lower than 4 anytime soon, even if the economy slows a lot. What it is doing, it's building a beautiful base between 4, 4.5. To my view is that sometime in the second half, we're going to move towards $5. And that'll be a key factor. We've never really gotten above that. We might have briefly approached it. At that point in time, if you tell me copper's $3,000, gold's $3,000 or something, copper's $5, I'm really hoping some of these juniors that have copper and gold that I own are going to be a lot higher than they are now.
Yeah, I would certainly hope so at that point. And okay, so that's a really interesting point about copper. You mentioned that tie to the economy, and people do tend to refer to it as Dr. Copper. It will tell you how the economic health is. But so for you, it's more we should be focusing on that short supply situation now, and that's maybe more important for copper.
Yeah, true. Just like a commodity, and there's not a lot out of it. There's a great more demand for it. And quite frankly, there's less and less optimum places to go and find it. And so that's when you find some of these copper projects in North America that have outstanding grade. They're going to get a premium, hopefully, for their project.
Okay, yeah, I think that does help shed some light for me on those different copper time horizons that I keep hearing about. So really helpful. And any other metals commodities that you are interested in right now or following? Because it's just such an interesting set of circumstances right now.
So everybody still asks me about uranium because you remember a few years ago when no one wanted it. It was probably my biggest single bet I ever made in the junior resource market. Uranium was under 20, things like chemical were under 9. But in January of 2024, when uranium went above 100, I got out and I've never gotten back in. I did note a few weeks ago when there was a sharp sell off that if it would continue lower, I would look at it again. It hasn't yet. It still may, even though uranium has a phenomenal supply and demand scenario. The difficulty there, Sharon, Charlotte, is the difficulty that existed since day one. There's so few producers. There's actually only a handful that you could actually play, and no other. Every other metal has dozens, if not hundreds, of different producers at all. And therefore, if you're going to play it, whether you're bullish now or in the future, you have to overweight in the producers and the people that only, because the rest are just hopefuls, just like junior gold companies, which most don't end up succeeding at. But it has a bullish. The one metal that a lot of people aren't speaking about at the moment, but has turned up very nicely, and I've invested in it through a couple of plays, and that's zinc. But it's not a metal that's going to go roaring through the roof where everybody needs it, but it has some very bullish fundamentals. I just think that the important thing to recognize is that there's no longer ample supplies of metals that they used to be sitting out there. And second, now countries are starting to become defensive of what they have because of their needs for it. And therefore, it's going to be more challenging to go and get new supply.
Yeah, exactly. Okay, very interesting. I'm gonna have to look into zinc a little bit more because for sure it's not one that I've heard mentioned very often. I think before I let you go, I wondered if you could give me a sense of how your portfolio is looking overall right now. You mentioned you took some money out of gold to go further into the juniors, so I'm curious how that's playing out for you.
So, Charlotte, no one, and I underline no one, should own my portfolio because no one should be just in cash, gold bullion, and juniors. That's a no for anybody. But I'm able to take that risk and all the other reasons. What I say to general people, I'm still part of a planning group here. I'm still part of a macro. The overall group has over $1 billion in management. My philosophy is this: the stock market is priced to perfection. Call it a speculative bubble, call it whatever you want. If the perfection doesn't continue, it has a good chance to lose a good bit. And my view is if you haven't been in by now, or you've been in, and the older you are, the less you should have to that exposure of the retreat. The other factor is, again, I said it to you earlier in the interview, capital preservation now, managing what you have. And the reason most people are still not caught up in that is because they're spending more than they make. Less is more. We have three big problems in the U.S. Let me just name them. I know you're out of time, but let me just name them. Our debt crisis, a retirement crisis, and an infrastructure and natural disaster crisis. And as good as Trump is in the eyes of some, and as good as he might have been in other areas, even he is beyond fixing those to a point where I don't believe they're not going to impact us in a difficult manner. And most Americans are not prepared for the fact that 2/3 of Americans are working without a paycheck, have little or no savings, are going to have to work well into their older age and impact. Trump has clearly not had any consideration to austerity. He's willing to spend and borrow because he thinks he can, build the economy and drive it through the roof and all. And then the third is our infrastructure, which is absolutely crumbling, and our natural disasters, which when I wrote about this a year ago, I got people who wrote me, what are you, crazy? Look what just happened in Los Angeles. That's going to be a $500 billion by the time it's done and all. We can't afford one or two more of those. So there are a lot of things to be concerned about. But I think the overall attitude is less is more, spend less than you make. And then once you're situated and hopefully not stressed out, then you can look at speculative things where trying to turn a dollar into two, three, or four. But remember, for everyone that turns a dollar into two, three, or four, more turn $4 into three, two, one. And I've been one of them.
Yeah, I do think unfortunately that is true. So that's a good place to wrap it up, but I'll put it back to you one more time and just ask if there's any final thoughts on your mind right now as we're heading into 2025.
Well, for me, it's the twilight of a career. Uh, I only say that, and I'll go back to that again. And I don't want to say that just because somebody's a lot younger, you don't deal with them. But I don't think you're going to get any discount for lack of experience. So I think it's very important wherever you're getting your information from, whether you're handling it on your own, but you're reading from others and all, that the people have demonstrated an ability to stand above others. You know, when everything's going great, everybody looks like a genius. But were they half geniuses when everything was going bad? And so I think people's experiences and expertise is going to be more critical now than any other time in the 40 years that I've been around this investment arena.
Yeah, I think that's great advice to end on. It's a little bit of a time for caution right now. So thank you so much for coming on to talk about what's going on in gold and much more.
And let me just say this for my last time. Go Canucks.
Thank you so much. Perfect note to end on. Once again, I'm Charlotte McLeod with investingnews.com, and this is PH.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.